Greetings guys, I welcome you in this beautiful video. So there's something interesting that I want to share with you, something very important when it comes to trading in a range or even in a trending market in synthetic indices, more especially V75. So here we have this market here. I'm on the 15-minute time frame, and at this scale we can see that there isn't any much direction. There isn't any much direction at this scale unless I zoom or unless I change the time frame. So usually this is what we do as traders. We find ourselves making decisions or taking decisions without actually getting deeper into details. So for an example, we can see this range that, okay, the market here, it is giving us some areas of resistance here, and then below some areas of support. So you find that a trader can make a decision based on this level, and there is nothing wrong about that. But wait, let me just explain. So what the problem is about range trading is that usually that's where all our mistakes come from, more especially when you're trading a very small range or a range that emerges from a wave. Because remember that we have waves and then we have patterns. So every pattern in a bigger time frame is formed of a wave. So when you trade this range, you find that you fall under a lot of traps. For an example, you'll find that it will trigger emotional trading. Why will you involve your emotions? Because sometimes when you take a decision, you'll find yourself that you're taking a decision very late, and when you take a decision early, you find that you take the decision without waiting for the confirmation. For an example, in this case, we have these two lows here, and then we have this green candle. One trader can take a decision after this green candle saying that, okay, I'm expecting that price is bouncing from that level, and then all of a sudden the market collapses. After it collapses, because the trader is angry that the trade is not working against him, he might find himself taking a sell here, thinking that it's a breakout. This means that now you are making decisions not based on analysis or not based on observing, but we are taking decision based on emotions which were triggered after you lost this trade. And then when you see the market going up, you will find yourself now reversing the wheels and buying all the way up there, thinking that, okay, it has broken up this high and so on. And this mistake, it can make you believe all the notions that you form. You'll find yourself buying here, and then all of a sudden the market collapses against you. So then what should you be doing as a trader? So this is a very important thing that I want to share with you. If you are to be trading a range, or if you are to be trading such a consolidating market, first you need to establish the main direction or the main side of the strength. For an example, if I can go to just a random high time frame, for an example, the 2 hour, you're gonna see the difference there. You're gonna see that the way the market presents itself to us is completely different. So here, this is what we see on the 2 hour time frame. You can see that the market is moving all the way up. It is moving all the way up, and you can see that this is in a weekly of an impulsive wave. This range that we are talking about is in a weekly of an impulsive wave. So this is what is going to assist you to make sound decision when we go back here to our time frame, because we've now established the theory or the mindset that this market is controlled by the buyer. So now when we gonna take decisions here, we know that the side that we're gonna support or the side that we're gonna play on its favor, it is the side of the buyers, and we know exactly that we're expecting a breakout to be on the upper side. Why? Because on the lower time frame there is this trend line here which is on a process of forming an impulsive wave, and we know that we also have some kind of a target here or expectations. So when you make a decision in this range, you are not just making a decision blindly, you are making a decision with an understanding that this is a wave that is going up, and you are not expecting any breakout on the downside. You are expecting a breakout on the upper side, and when you are expecting a breakout on the upper side, then it means that whatever decision you make here, whatever trade that you open or position that you open, you're going to be opening a position that's going to be favoring the buyers, so that you're going to avoid fake breakouts, or to avoid your stop loss being wiped. Because if you're going to be taking selling opportunity, you are likely to lose that trade than you are to buy, because the trend is on the buyer side. So if you are gonna be only expecting the price to be on the support to only open a trade, then you're on the safe side. Then you're on the safe side compared to when you'll be expecting prices to bounce on the resistance. So whenever you take a decision, maybe on the opposing side, or when you counter trend, when you trade against the trend, you need to make sure that you have your eyes opened. You need to make sure that you are monitoring your trade there and there. For an example, let me just erase everything. You can see that here with these waves of the buyers going up, and then we have this wave of the sellers. So you can see that here, for example, this wave, the sellers tried to push and they failed halfway, then the buyers took it up again, meaning the sellers were not able to complete the set of the wave. They were not able to complete the set of a wave in the first try. They were only able to maybe try to complete it on their second move, which is also another symbol that it's hard for them to complete a wave than it is for the buyers. So I hope it is making sense. And initially we can see that now we had this wave at the beginning, which because of this support, it tells us that price is on the territory of the buyers. Above this level, price is on the territory of the buyers, because that's the most lowest low that we've seen in this area, and there isn't any other low. So it tells you that unless the sellers push below, the price is still the buyer's price. So this is our border and also our target all the way up there. So I hope it is making sense, guys.